Hello, trading has closed on September 17th, 2025. Let's do our disclaimer, then we'll go over our calls and make our predictions. It's my trading plan for Thursday. Thursday is the 18th of September, 2025. Right now it's just a plan which I can change. My plans can be wrong, so trade at your own risk. Today's pattern had the early low, that's this. Tomorrow has the early high. I don't like to trade on days with FOMC announcements. We get these huge swings. I don't have any accurate way of predicting moves like this. Today, not making a directional call turned out to be fortunate because we closed essentially unchanged, a tenth of 1%. And whenever we close unchanged, I just repeat my last prediction, which is that we're at resistance, and it's a candidate for a top here, but right now it still just remains a candidate. Let's go into more detail. Well, during the day, MEJT said all these moves, this one were false. They weren't going to stick. That's played out. The afternoon set lower and higher targets. They've already played out. We traded higher, traded lower. Said all these seemingly forceful moves weren't the real thing and weren't going to stick. After printing bars completely over the upper Bollinger Band, we now have a couple under it. It's a sign of flagging of the trend, although it's common but not required to have one more fling up before you start down. This is just a reminder of what we said. We said we looked for lower prices printing, but we got lower prices for sure. That's not the same thing as saying we closed lower, even though we did close slightly lower. We said we are in an area where reversal lower is credible, but so far it's just credible, it's not assured. Well, I still can't count this as a five-wave structure, and we had this nice break over the trend line, but it reversed, and now we're under the trend line. Until we take out some of these lows, doesn't mean anything. All we can say now is we couldn't hold on to the highs. It's not the same thing as saying we've undercut the lows. So it's a candidate for a top at resistance. Once again, we had all kinds of high prices. We traded under all the intraday highs. It's a negative pattern, but time runs out tomorrow morning, not at this close. Last time I looked, futures were up over 12, and if we open up here or gap and take this out early, all this negativity goes away. Right now it's been several days where we just can't hold on to the highs right at that resistance area. Well, Tuesday's pattern has the early high regardless of where we open. Typically it's a bullish day with a high in the final hour. Failure is a straight line drop. This day in the cycle often has an irregular pattern. Repeats every 32 calendar days. First move after the FOMC announcement was up. Tells us higher prices are coming. Doesn't preclude going lower first. Now usually you get a three-leg whipsaw after the announcement. The first leg moved 10.70 points higher from the announcement price. Second leg so far has been 52.54 points under that price. So if, capital letters, if that low holds, we should go more than 52.54 points over that announcement price, a little bit of leeway here, implying a new all-time high of at least 56.23, and that's if this low holds. But despite all these bullish signs, nothing precludes us from going lower first. We haven't maintained a break over a trend line. We can't hold on to intraday highs at the close, and we closed under the FOMC announcement price. The FOMC announcement price tends to separate markets going up from markets going down. Now, it's not exact. and a few points one way or the other isn't enough to hang your hat on. But it would have been a lot more positive if we closed under that price. Again, futures are up, and if we gap over it, it's the same thing as closing over it. But we don't know how we're going to open yet. With remainder resistance, there remains a plausible case for a tradable counter-trend decline. I need to see a breakout from this range before I risk money on a counter-trend trade. At some point, I plan to go heavy on the long side. It'd be a lot easier if we drop first. It's kind of the same old song. I can't count this as a 5-wave structure. Maybe I'm missing a count. That's always possible. But I think this is, I don't think that's wave 2. I think it's A of 2. I think that's B of 2. And I think we're going to have a wave C down. But I'm perfectly willing. I'm not willing to risk money on it in what I think is a strong bull market that's going over 7,000. I'm hoping to see a drop, after which I would go heavy on the long side. But right now, we're just trading in a very narrow range. I don't think it's good that after hitting highs 4 days in a row, we traded under all these highs. I mean, it just looks like stalling at the top. But until you take out some of these lows, there's no proof. So once again, we closed unchanged. Tomorrow has the early high. It's usually a bullish day. We could rally tomorrow and make me look silly, but I'm not risking money on it yet. I would like to see, let's go lower first. I'd like to see a straight line drop, but again, I need more evidence than I have. I still think we're going over 7,000 before the year's up, and before I risk money on the short side, I need more evidence than I have right now. And that's today's call.